Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, August 5th, 2009. The yen gained today versus the euro and other currencies like the Aussie and US dollar in New York morning trading as two US releases increased the sense of risk appetite in today's session. The pair hit resistance at the 137.60 area following Monday's rally to that level. The euro tested that level twice yesterday and again today before turning back down. Still, the pair's action was confined to the range set yesterday. Before we get to more market highlights, let's look at the fundamental news from the U.S. The ADP Employment change, which came out around the New York Open, showed the private sector in the U.S. shedding 371,000 jobs in July, a figure that was lower than the previous month but quite higher than the forecast figure. It was still the smallest decline since last October. But since it undershot expectations, it hurt investor sentiment. A second report from the U.S., released at 10 a.m. Eastern, was the ISM Non-Manufacturing Index, a measure of the services sector. The index fell to 46.4 in July, meaning that the sector contracted faster than in June. The 50 level here separates expansion from contraction, and it's now the 10th month in a row that the index has been in the contraction territory. The Business Activity Index and the Prices Sub-Index showed the biggest deterioration. U.S. stocks faltered in the wake of the two releases, which pressured the greenback against the yen. From a high of 95.40, the pair slid to a low of 94.60. That move, as in the euro-yen, stayed within the range set out last week. The pair has been trading sideways for about 9 sessions, staying within 94 on the support side and 95.85 on the resistance side. The euro-dollar was also trading sideways, but after sliding following the two U.S. releases, it managed to rise back up and move above its previous high for the day. U.S. stocks found the bottom around noon and began to pare their deeper losses from the morning, which helped support the euro. Still, at the time of writing, the euro began falling back to the 1.44 level. In the UK, the services PMI showed that the sector expanded for a third straight month. The index rose to 53.2, beating expectations. With the manufacturing PMI unexpectedly climbing in July as well, it's an indication that the UK economy may be coming out of its recession. And another sign of good news for the UK, housing prices rose 1.1% in July according to the Halifax House Price Index. It's the second rise in prices in the past 3 months and follows on the heels of the nationwide report last week that showed a 1.3% increase in prices for the month. The pound-dollar pair moved above 1.70 today, the first time it has done so since October 21st. Though the gains were rather limited, the pound did move above its resistance from yesterday's session at 1.70, which could imply an extension of the rally seen following the pair's break of 1.66 last Friday. The US dollar-Canadian dollar pair, after rising in favor of the greenback to the 1.0780 level, fell back down in New York trading. That was a test of the 50% retracement of the recent fall in this pair. That level also represented support that was broken to start the week, so this was a retest of that support now as resistance. Also, despite the weak news from the US and slanting stocks, the loonie was rather resilient in New York trading, breaking below a short-term line of support. Traders that sense that a global recovery is on its way and that commodity prices will rise are increasing the demand for the Canadian dollar. Tonight, look for employment data from both New Zealand and Australia, while overnight Germany posts its factory orders. Tomorrow morning, both the Bank of England and the European Central Bank will conclude their interest rate meetings, where they will give their decisions along with their statements. Also tomorrow, Canada will unveil its building permits for June, and the U.S. posts its weekly jobless claims. And that wraps up today's coverage. Thank you for watching us here at CMSFX.com, and happy trading.